Ahead of earnings from BT Group on Thursday, Ofcom has ruled that BT's infrastructure arm, Openreach, should be a legally separate company within BT's group operations. Meanwhile, what should we be looking for from BT's earnings when they are finally published on Thursday morning? Christopher Nicholson joins us now from ORACA. Christopher, welcome. Before we get on to the earnings number, let's take a look at this most recent decision from Ofcom about BT's Openreach. We have had calls from some of the rivals to BT suggesting it should be stripped out of BT completely. What's your reaction to the Ofcom decision today?
Hello, Jeremy, and thank you for the invite. Our reaction to it is that effectively BT have got a really good compromise out of this deal, and probably Sky and Vodafone, etc., will be pretty livid about it. They would have hoped that asset would have been removed entirely from BT's control. You can see why, but on the other hand, you can also understand why Ofcom have gone for this, because we're still within Europe in spite of Brexit, and if Ofcom had taken the suggestion that BT Openreach should be removed and made a completely separate company, it's very likely that Brussels would have said no, and in that campaign, it's very likely that the likes of Deutsche Telekom, France Telecom, etc. would have backed up BT's position, because it's never happened before that the entire infrastructure has been taken away from the leading operator or the ex-incumbent.
So is this a compromise?
Yes, I would think so, because Ofcom's point of view is let's get something done rather than nothing done. So let's go for the compromise with a view that if BT doesn't perform in the way we're expecting it to perform with the new conditions, then we can always go back to BT and say, right, well, you've had another 3 years, so this time we are really going to remove it from you. And that is a significant lever, although, of course, BT may take the point of view that that will actually never happen, and they can always hold up risk to the pension fund deficit, etc., which is about 12 billion. If you have the Openreach asset, you can always argue, well, it will be relatively easy to patch that deficit, even if equities don't and bond yields continue to decline.
So what should we be watching for then, that BT is living up to the expectation now that it's been granted permission to keep this, albeit within a different company within the business?
Well, I think there's several things that business at large should consider, especially small businesses and especially people in more outlying areas who are off the main network, if you like, and are suffering from lower broadband speeds. One of the issues I would certainly like to see is that Openreach's service levels are improved immeasurably from a minimum 5 to 25 days to get into the actual exchange if you're a competitor trying to hook up a new customer, to them in fact cooperating and say, well, the deal is that we get to control the asset indirectly and the cash flows directly, and as a result we will take a loss in the medium term on laying proper infrastructure to outlying villages. Otherwise, these outlying conurbations, well, they're not conurbations, but these outlying areas will effectively become disenfranchised from the general UK economy, and that surely can't be right. What you want is slightly less urbanisation and people not to feel they all have to be in London or Leeds Bradford conurbation or Manchester.
What about the capital expenditure? How much is BT committed to spending on this, over what sort of period? Because I guess that's another measure. That's something we can measure quite literally by the amount of money that they're suggesting should be put aside.
We can, and it's an interesting point, Jeremy, as well. They've got 6 billion earmarked as a 3-year capex programme, much of which will be through Openreach, on the basis that they have said that what they want to do is improve the network, and that should mean higher speeds. But higher speeds for whom and in what geographical locations is another question. Also, the way that capital is allocated directly within Openreach will be quite important. But again, at some level, it misses part of the point, which is that from a competitive perspective, we need Openreach to respond more quickly for the good of the entire UK economy, not just the competitors Sky, etc. and Vodafone.
In terms of the numbers we're watching for on Thursday morning, what are the headlines you'll be watching for in terms of what investors would be interested in?
Okay, so from an Openreach perspective, I'm going to be looking at the way in which the capex is distributed and whether or not that envelope shifts either down or up, and interpret that accordingly. We'll also be looking at the top line number, and we will hope that that will continue to grow at around the 2% rate. But we will be aware that Brexit will have had some impact on large corporates making decisions, and maybe small corporates too. And it'll be interesting to see just what the scale of that impact is. So if we can isolate the Brexit impact, that will be very interesting in general, as well as for BT itself. We'll be hoping for an EBITDA margin around that sort of 40% level. And we will be looking at the subs growth and average revenue per user and the acquisition EE Mobile.
I want to catch up on the EE Mobile thing in just a minute. I want to talk about BT Sport as well, because this is a massive bit of expenditure for BT. How is that working out? Are they managing to lever a decent profit out of this?
Well, I think they will lever a very decent profit out of it. I mean, mobile companies historically produce fantastic cash flows, so that shouldn't be too much of a problem. If they don't, that would be it's easier to get it right than it is to muck it up. So that would be the real question if it didn't work. I think their package with BT Sport is very interesting positioning. So you get a 6-month trial on the mobile business, or if you have a mobile handset and you can't sort of port that to a large screen, it is just available on the mobile handset. And then they're suggesting £5 a month thereafter if you want to continue with the service. And what they're saying is this is a way, when you're not in front of a big screen, to see your sport and keep up with it. And in fairness, Sky did move into the telecoms market. You can't really expect the others just to sit there and do nothing. So BT have said, well, we can fight back. We can buy content too, and we can make offerings that will be attractive. And also, I would say that it's very good that there's some decent large-scale competition for Sky.
You mentioned EE, obviously now with the return to the mobile business. You're right. I mean, the company which was originally telecom's gone to broadband, it's now got the content, and the mobile really sort of completes this picture, doesn't it, for BT? How is that going to work out? Is BT good enough? Has it got the experience to lever a profit out of the mobile business, bearing in mind the other arms of the BT operate within different areas?
Well, with 100,000 personnel, they'll definitely have the skill set in there somewhere. Our experience generally is that the top tier of management is extremely high quality. It's difficult to see the quality below that sometimes, but that may just be the way in which the communication system works at BT. So yes, we would hope they have the skill set. They've certainly been in mobile before, although they didn't do very well, but they've had 10 years to learn about that, arguably even 20, so they shouldn't make the same mistakes again. EE is its own business. It's not being pushed to start up in the way that you could argue Cellnet was. So they take it as a going concern and they manage it appropriately, i.e. it's doing a lot right. It should be fine. They should do very well out of the acquisition.
Let's take a look at the share price. I think it's an interesting move. We've seen this move up in today's trade. This is a daily chart for BT Group, currently trading just over the £4 level. Just talk us a little bit about the share price and where it's come from. Recent highs at £5. I guess some of the moves back into this week will be very much on these earnings. What's your thought about the stock price of BT Group?
Well, I think it's very interesting. So let me just set the scene a little bit first. So if we looked at that and said, let's have a look at that just before the Brexit vote, it was outperforming the index or coming back towards the index in terms of performance, the FTSE 100. It's significantly underperformed the index since the 23rd. And there are two reasons for that. One is that the chairman said, if we leave, it will affect the UK economy, i.e. BT's stock price, and increase its pension liability. And I think the other issue is that because that's been said, a lot of people have taken the view that, well, BT will be affected directly by people holding back on capex decisions in other parts of the economy, which affects BT's services and service demand. If you looked at BT over a 5-year period, it's fantastically outperformed the FTSE 100. So the issue is now, is this really a buying opportunity? And although we don't give that type of advice, there's an interpretation to be made. And if you look at the relative strength, for example, this morning, it tends to be in a fairly narrow band for BT. It's upticking. And there might even be a possibility for the RSI to break out at this level, especially if the first quarter numbers are showing still growth and preserved margins.
So the final question, just bring us back to where we started and take a look at the business overall and against the likes of Sky and the other big incumbents. Is this a choice pick for you, or are there others in the sector that you prefer?
I think at the moment we prefer BT. It's essentially underperformed since the Brexit vote, considerably compared to the FTSE 100. It's on about 6 times market cap to EBITDA. The rest of the sector, excluding Vodafone, is on around 8 times. And you might say, oh, well, most of those have some sort of media content. But then BT has media content now, so why shouldn't it be rated at 8 times of that metric? So I think it looks like there could be plenty to go for. You've got a lot of factors coming together, so you've got it underperforming the index in the last 6 weeks when the index has soared, relatively speaking, post the vote. You've got the fact that it's on a multiple, even halfway through today after the open, up 3%, that is at 6 times. You've got 2 turns, and it ought to get some of that back, maybe even a turn, but that could still be worth a good 10-15%.
Good. OK, all right, Christopher, it's a pleasure. Thanks indeed for joining us with a look there at BT in the wake of the Openreach decision by Ofcom and ahead of earnings out at 7 a.m. on Thursday morning.